Today, given it's the holiday season and everything like that, we're going to be going through and kind of just talking about some basics about Black Friday, seeing if Black Friday actually matters to the stock market or individual stocks and what we can kind of glean from it. So I went out there, kind of looked around at some stuff, also got some stats, and then also just kind of talking about from my personal experience in the market around Thanksgiving and the holidays is we know that there's kind of some bullishness going into holidays usually. Okay, it's the end of the year. Big corporate funds want their numbers to look good so that they get better bonuses, all that kind of stuff, and get some window dressing basically. So we would do that. It's a good time of the year. Everyone's happy. You don't want to stress about your positions too much going into holidays. So there is kind of that general bullish idea behind things. Now that doesn't always have to happen. Some of the most recent examples that I've been talking about, if we come over here and we actually look at 2020 or 2021 right here for Thanksgiving, that we could actually see that it actually went down just into and then after Thanksgiving. So there was a precedent there. And then if you guys remember going all the way back to 2018, and this is one and through here, 2018, we had down going into basically the end of the year. I mean, talk about no Santa Claus rally on that one. Things didn't really get going until the Fed pivoted, which was in the new year. Okay, so while there is seasonality and there are historical norms, we just always need to be prepared that we need to read the charts and interpret them properly so that we aren't caught flat-footed based on that. Right now, right here, it does seem like the market is trying to hold up. It was a little bit overbought, took a dip, and so far over the last couple of days, it's actually been holding sideways. So it does seem like we might get a little bit bullishness into this, at least Thanksgiving. You know, can't say a little bit further from there, but about there is what I'm seeing so far. Beyond that, if we kind of look at some of the stats, Black Friday has grown in scale and significance. 2021 was $9 billion during that sales event, and the average person increased there about 5% year over year in 2021. Again, kind of maybe some of these stats a little bit different due to the pandemic and due to, you could say, stimulus checks or even just online shopping, that kind of stuff. I mean, we know what was going on back then, that everyone was buying a lot of stuff because, well, we're stuck home and we needed to furnish our house or our office or anything else like that. So just kind of keep that in mind. And also for this year, at least, there are some differences. Interest rates are going up. Inflation is going up. So we just have a lot of different cross currents this time. I don't know if it would be a typical season that we can really reference to. So it'll be interesting to see what the numbers come out with. Amazon was the significant benefactor that spend. It was 17%, almost 18% of total Black Friday sales booked through the e-commerce giant. Now keep in mind, that was during the middle of the pandemic, so we'll have to see if that actually keeps up or things kind of change a little bit. Now, one thing that I was kind of looking at is higher consumer spending number based on more buying, or is it based on inflated prices? Now, this one can be a little bit debated because my understanding is that consumer spending is just a raw number. It doesn't necessarily account for external factors like inflation or anything else in there. It's just like, okay, how much did people spend? And right now, a lot of people are out there saying that the consumer is strong because, well, consumer spending is still up and significant. But again, is it that people are buying less, but it costs more, so the net number comes out same or greater? We don't really know how to parse this out yet. At least nothing that I've seen does a really good job of doing that. So we need to be careful about that. It could be a little bit of a misleading factor or number saying, oh, consumer spending's up. Well, is it? Everything's costing more. I've been hearing people like, the packages of goods that they're buying is smaller, but they're keeping the price the same. So we're getting less for the same price. So that's one situation that we could be looking into. Of this, I'm looking at things that I think that investors and, of course, the population will be looking at: inflation, interest rates, geopolitical uncertainty, and corporate earnings. Now, I highlighted the corporate earnings because I think since we're in the stock market and we're traders, that is going to be most important to us. We already know kind of inflation, what's going on there. That seems to be settling in, not necessarily settling down, but settling in. And interest rates, that's already kind of been factored in too. We know the interest rates have gone up a lot. We know there are going to be a few more. And we know that the Fed is going to generally be holding the interest rates higher. So a lot of that's kind of baked in. Geopolitical uncertainty, well, yeah, that's anybody's guess. So we just don't know what to do about that. And, honestly, that's not going to be affecting Thanksgiving or, Christmas or anything else like that too much. It will affect the entire stock market if something does happen in that regard. But that is something that we can't really talk about during this holiday season because it's a black swan event. We just don't know. So I was kind of looking at corporate earnings, and I think that that is going to be where things matter. We won't know it this month. We won't even know it next month. We will know it in January when Q4 earnings start to come out. So it's going to be kind of like a backwards looking indicator to where we say, oh, well, how did those companies do? And, was the consumer there? How did inflation affect them? Were they able to buy more? Was there strong demand? We don't know yet. And that's kind of what I'm wondering. The other thought about inflation is that since the economy is kind of it's a human construct, it's an idea, because if we think that the future is going to be bright and cheery, well, we make economic decisions based on that. If we think that the future is going to be down and not good and whatever, we make different decisions based on that. And so knowing that inflation is here, there could be a large group of people, subset of people, that are saying, okay, well, if we know that inflation is pretty much here and things are baked in, well, then I better buy that thing I want now because it's only get more expensive later. And unfortunately, this is a kind of a self-propagating situation to where it's a snowball. Okay, so inflation's here. So we know it's going to be more expensive later. So I might as well buy it now because it's going to be more expensive later, which helps keep things up because consumer demand is still here, and that helps keep things up. So you see, it's a cyclical thing, and it kind of keeps chasing its tail. This is why the Fed has said that it is a very challenging spot to be in as far as inflation goes and having to deal with it and address it, because they don't have a ton of tools to deal with it. They can reduce their balance sheet and they have interest rates. Beyond that, it is the consumer kind of chasing its own tail, creating this upward spiral of inflation. And the Fed is doing its best to try and break that cycle. And unfortunately, it has to damage certain things and has to bring the economy down in order to stop that cycle. So, dare I say, we are our own worst enemies as far as that situation when inflation starts to kind of get out of control, like we are starting to see. It's nothing like the 70s, but it's certainly here and present. And Jerome Powell has said specifically they are trying to make sure that this doesn't get, embedded into our economy too much or embedded into our psyche too much. Because, again, if we keep thinking that inflation is just going to be here, we're going to make future plans with that in account, and that will continue to keep things going like that. All right, so let's see. Black Friday, Cyber Monday, 30% of people surveyed by the market research firm Numerator said they spent less than in 2020, because again, whole craziness of all that and stimulus checks, as a result of having less disposable income due to rising price on everyday goods. So again, that's going to be kind of the wrinkle as to, I think, in 2022, what that's going to be looking like. So if we look here, we can see that companies like Amazon have already lowered their Q4 sales guidance. We've seen a lot of companies do that. We've seen Apple say that they are going to be producing fewer iPhone 14s and all that. We've been seeing layoffs. We've been seeing a lot of stuff. Some of these things to watch, watch Amazon, eBay, Square, PayPal. They might be some indicators as far as, how did the consumer do. But again, unless we get reports ahead of time, we won't know until earnings. Now, on the other side of it, if we want to say, well, this is a consumer retail time of the year, and we want to know what kind of stock specifically could we trade, well, basically look at consumer retail. Here are some names. Dick's Sporting Goods, Deckers, I think that's Build-A-Bear, Ross Stores, Foot Locker, Skechers, Crocs, Buckle, Gap, Urban Outfitters, and Best Buy, just to name a few. I got to say, some of these are actually looking pretty strong, surprisingly. For as much as we are basically going to go into a recession, everyone's talking about that, inflation, credit card debt, all these things. And yet a lot of these stocks are still up. Now, some of them have been chopped a lot. Like they're not all perfect, so go take a look at them. But I'm actually personally a little bit surprised at seeing the results or reaction for some of these stocks. Now, there are still some down. Stitch Fix, or no, it's Stitch Fix, SFIX. So whatever that, I think it's Stitch Fix, but that mail order clothing one. So there are still some things that aren't doing well. Goose, I think, is also another one that's just kind of still down in the dumps, and maybe Nordstrom and some other stuff like that. One thought I had was maybe since this is seasonal, it could be a buy the rumor, sell the news. So the fact that we are going into the end of the year, retail, consumer buying, basically consumerism, all that kind of stuff. Maybe it's a buy the rumor. And so we buy up in anticipation of that. We buy up because of seasonality. But then maybe the selling on the news, whether it's good or bad, could be once earnings start coming out or once the holiday season comes to a close, or we start getting reports that, yeah, actually the consumer is not doing great, whatever that might be. So just ideas that I'm putting out there for you to keep in mind that what these moves might be, they might be in anticipation of some other result, and that could be the buy the rumor, sell the news. All right, so this was from 2018, a little graph that I found showing stock price November 16th, 2018, and then November 30th. It was a little bit mixed, as you can see here. We've got some positives, but then we have some negatives. We got some zeros, and then we have some small numbers. So honestly, you kind of have to take a case-by-case situation. I didn't think that I didn't find that there was much correlation on something like this. Some were up, some were down. It kind of depends on what the market is. We're generally speaking in a bear market, and so everything is kind of going every which way. Again, this won't really matter, I think, until earnings come out in January. So just because we're kind of looking at the holiday season, November 16th to November 30th, mixed results. So take that for what you will. Now, the other thing as far as our economy goes, and maybe the market as a whole, because the market is trying to figure out what the economy is doing and how that's all working out, is that we'll be looking at, this is basically credit card consumer debt, or just consumer debt. This is in billions, and we can see going all the way back to 2008, we had a very large peak, and that was the end of the bull market for the housing crisis and all that kind of stuff. And it kind of feels like we're in that situation again. Now, leading up to, you can see here, leading up to the COVID pandemic and all that stuff, we were kind of on track again to top out and have a problem. It almost seemed as though a lot of things I see, and this is getting off track a little bit, but a lot of the things that I've seen out there have shown that we almost were going into a recession coming up on 2019, 2020. You can look at the yield curve inversion, and it was just about to go inverted, but then the pandemic happened. We got a giant correction in the market. The Fed came in with a bunch of money and basically salvaged something that on its own accord was going to be happening anyway. So it's kind of like it got another shot of juice and steroids just before it was just as it was on the ropes and about to go down. And then we kind of revived things. And now it almost seems like that extra shot of steroids kind of really created a hangover. And so that's kind of what I'm looking at. And I think that's what a lot of other stock traders and analysts are looking at, saying, this might actually really end up being a big deal because we were so close to going into a recession beforehand. Then we just put in more stimulus, and that just kind of exacerbated the problem. Now we have to unwind and undo all this stuff. So that is kind of a thought out there. You can see here that we had a little dip from credit card debt because of the COVID and because of all the stimulus stuff, but now it's back up. Okay, so that's something to be watching out for. Another thing to be taken into account is, again, talking about the consumer, the everyday person, that if they are putting money on credit cards and our interest rates are going up, those interest rates on credit cards are going up even more significantly. Okay, so somebody who maybe was able to pay a 15%, now they're going to be paying significantly more, 18, 19%. Okay, I mean, we're even seeing new credit cards 22%. And it's going to keep going up as long as the Fed raises interest rates. So I even saw one, I think it was 29% out there for credit cards. So, that's another thought. How long can the consumer hold up? How long can the consumer hold up given inflation and given higher interest rates and putting all this stuff on debt? Okay, so I think that generally summarizes the things that I'm looking for Black Friday now and in the past, and then also kind of what we're dealing with going forward. So it's going to be a little bit challenging to figure out where we are because this market is an absolute mess. And if you can kind of find an area that is doing well, great. But do keep in mind that maybe it's a little bit of a buy the rumor, sell the news. So careful around earnings because we don't know what those numbers are. They could be a bit of a surprise. All right, guys. Well, thanks again for tuning in for that. And we'll catch you in the next one. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.